This is totally customizable, so you focus only on what you want.
Okay, it's got screeners and watch lists.
You can even see how your predictions might affect the value of the stocks you're interested in.
Now, this is what I'm talking about.
Yeah, it'll free up more time for your true crime shows.
British baking competitions.
Didn't peg you for a crumpet guy.
Focus on what matters to you with Thinkorswim.
We call it the mother standard of care. It's how we bring hope to our patients, like Viola. Her team treated her cancer and strengthened her spirit so Viola could focus on their future. Cancer Treatment Centers of America. Appointments available now.
Get the brands you love at littlewoods.com. Whether you use it for studying or streaming, find the Asus Chromebook 11.6-inch in grey for just $199.99. All with inclusive delivery and free returns. Hurry, offer ends 25th of October. Own it. Shop now at littlewoods.com.
Welcome aboard Europe's 169th safest airline.
You were like my 169th biggest crush in school.
Your total body age is 169.
The number 169 never screamed glamour until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487.50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
And those companies can produce solid returns even if the averages go down. I almost feel silly pointing this out, but in an era where everyone's worshiping the alternative index funds, maybe you need a little reminder that individual stocks can give you individual performance.
Welcome back to the exchange. We are watching Boeing shares closely this hour after reports that the FAA is concerned it was misled about the safety of the 737 MAX. Back in 2016, the chief technical pilot for that plane, Mark Faulkner, told a colleague via text messages that a new automated system in the plane called MCAS was making it difficult to control in flight simulators. This, according to the New York Times, and we spoke to that reporter at the top of the hour. This same chief technical pilot had also previous to that asked the FAA if mentions of the MCAS could be removed from the pilot's manual altogether, saying they were unnecessary. In the messages that were just discovered, Mr. Faulkner saying, quote, "I basically lied to regulators," in parentheses, he adds, unknowingly. These revelations are hitting Boeing shares big time. They are at session lows now, down about 4.5%. And that's why you see the Dow down more than, just under, I should say, 200 points this hour. Lion's share of that is because of this stock. Let's catch you up on a few other stories that should be on your radar on this Friday. It is time for Rapid Fire, and here with their takes are Contessa Brewer, Bill Griffith, and Courtney Reagan. And there's so much to discuss today. How about Apple CEO Tim Cook in China to meet with the country's chief of market regulation? The agency says they talked about Apple protecting consumer rights, expanding its investment in China, fulfilling corporate social responsibility. But this comes a week after Apple had to chose to remove a crowdsourced map service that allowed Hong Kong protesters to track police activity. Cook defended that decision, saying it protected Apple's users. Is he not the greatest diplomat this country has practically at this point? Here's somebody who can get along with Trump and have the president singing his praises, get along with the Chinese and have them singing his praises, and somehow not yet have this massive customer backlash amid any of this. It's amazing.
Yeah, he needs to give Adam Silver a lesson in all of that at the NBA, right?
Adam Silver may or may not even need it at this point. Now you've got people saying that his response about not firing Daryl Morey, even though the Chinese called for it, so statesman-like. This is a tough one.
Also, we won't really know how savvy a diplomat he is, because what was released from that meeting was fairly limited, saying, we're going to talk about corporate responsibility. Well, of course, the Chinese want to talk about that. What Apple wants to do is do whatever is possible to increase their market share, which has been slipping.
It's a fine line they have to walk. If you want to be a global concern, a global company, you have to play by the rules of the countries where you are doing business up to a point, though. You cannot just completely abandon your values. Now, the excuse used for taking that app out of Hong Kong was for user safety purposes. That's great spin. but it still is questionable why they didn't get more blowback for doing that.
I was just going to say that Apple is probably the one company that got the least amount of blowback because they can pin it to safety. Whether that is true or not, that is what they said, and at least makes logical sense. And so there was less of a pushback there. A lot of political free speech situation.
Totally. And the way, like I said, the way they've threaded this needle when they have the most to lose from this U.S.-China thing going belly up.
Very much so.
Speaking of Apple, their first movie is hitting theaters today, and it's called The Elephant Queen, but it's actually about elephants, guys.
It's a documentary.
I just need some thoughts on this. This is what they're choosing to put in theaters? People are going to show up and watch a nature documentary?
Wait, do you know how big that movie about the March of the Penguins?
Yes.
Remember how big that was in movie theaters? You take a narrative about a parent's love, about surviving hardship, and then the animals are beautiful and endearing. What's not to love about this? I watched the trailer, and you know what? Sign me up, Apple Plus.
I know. I watched the trailer too.
You taking the boys? Would they like it? Because I'm thinking they're going after Disney at this point.
That's a good point.
It's a family kind of a movie, but the slate they've got going is very eclectic. They've got that. They've got a movie called The Banker with Samuel L. Jackson, which they're holding until Oscar season. So they want to play that game. So that's all starting to become part of the process as well.
Of course.
I'm in a documentary club. We typically watch a lot of crime documentaries. However, I went on a safari and I now love elephants. So I'm bringing it full circle. I'm either taking documentary club to the theater. We usually do it at somebody's house, and then we have to figure out how to get said documentary on what streaming service, who has a Hulu account, who has a Netflix. It's a whole situation. So either we go to the theater or we got to figure out the Apple TV Plus.
And speaking of which, and this is the fundamental point here, it is meant to push people to the new streaming service. So these will be in theaters for a couple of months, then go streaming in a very competitive environment.
And someone can help me figure out how to figure that one out.
Exactly. Next up, Credit Suisse downgrading Macy's, Gap, and L Brands to underperform. That itself is not that remarkable. What's remarkable is the stock reaction today. The firm there is saying a low valuation won't be enough to offset the downside in their profits and longer-term structural concerns. And look what happened. L Brands down 8%. Compare the market cap of these legacy retail brands. That's all the way on the left there, those combined bars. Okay, you almost got to squint to see it. It's just $16 billion cumulatively. Pales in comparison to even a company, as you can see over there, like Uber, for example, or Pinterest. Say, well, all right, that's a little bit small. But Zoom, combined, they are smaller than Zoom and Snap right now.
Yeah, I think just the structural challenges that are ahead for a lot of these mall-based retailers and department stores are just getting in the way of anyone really thinking there can be real growth here. So I think even though many believe that there are smart executives running some of these retailers, like Jeff Gannett, if you talk to the analysts, no one says he's doing the wrong thing. I think they're just worried that the format is not something that can be fixed and that is not compelling to today's consumer.
I'm still thinking about this documentary club that they're in. It's just unbelievable.
If they just showed at the local mall, the real estate.
The announced store
they might have more space to do that.
The announced store closures so far this year are more than double what they were last year at this time. And they're saying, this research report that's out, that if they don't have a decent Christmas this year, watch out next year.
Will there be a
Christmas? Even worse. Yeah. And then you watch out for the mall operators and all the other companies that are so dependent on these retailers for their business. It could be a tough year next year, especially if you don't have a very good Christmas this year.
When is Gap breaking itself up, Court?
So that's coming soon. It's still months out at this point, but
After
holiday. And that's a great question though, because they're spinning out Old Navy, which is the strongest business unit, and I think there are still a lot of questions that remain for the RemainCo, Gap, and the other brands. What does that look like, and is it compelling enough on its own? Can that part be fixed, frankly? I think there are some broken brands there as well.
Yeah, by the way, it wasn't just them. Signet also down today. A lot of the mall-based chains not doing well. Next, if you want to buy half a share of Apple, Charles Schwab is now going to let you. The brokerage's founder telling the Wall Street Journal it's part of an effort to attract younger clients to its platform. Kate Rooney is here to explain more about this, our CNBC.com markets reporter. But because the thing is, Charles is getting some headlines because they're the first of kind of the old school platforms to do it. But all the new school guys have been doing this for years.
Right. If you ask them, they really set the trend here. So SoFi is probably the most popular one that has done this. Robinhood has not done it yet. But something we know from the data from Robinhood and from SoFi is that millennials and first-time traders like to buy names that they know. So Amazon, for example.
They just can't afford to.
They cannot afford. It's
$1,500 a share.
Exactly. Netflix even is expensive. So the names that they would want to know and buy, they can't. So they were sort of priced out there. And SoFi did this last summer. They said since they launched that ability to trade a fraction of a share, they've seen Amazon shares 200 times the amount of people that were holding Amazon now have it on SoFi.
I will repeat what I said yesterday in a different context. Split your stock. Let's go back to
I was thinking about you as this news came out. I said, Bill was just talking about this.
It's an emotional issue for a lot of investors, but not being able to buy shares of companies they like. But I thought the trend was more toward exchange-traded funds anyway.
Yeah, right.
Everybody's buying ETFs now.
And free ETFs, that's something that SoFi also offered that we saw JP Morgan pretty soon after SoFi announced that. Said, we're going to do that too.
And that's been the explanation. So people say the reason why they're not splitting anymore is because people will just buy an ETF, like the QQQs, for example, or some kind of ETF with exposure to those names instead of buying the individual stock.
But the reason I bring that up is I wonder how much business Charles Schwab's going to garner if everybody's buying ETFs.
That's true. It's a little bit different in those individual stock trades. We'll see, but they're trying to get that high net worth individual and millennial. They kind of grew up with the baby boomers, and they say compared to Robinhood, they have slightly more wealthy.
Also, if you want to own Amazon, it's not that you want to own the whole ETF that Amazon has been put into, because it's a lot harder to do your own research to kind of track what it's doing. I mean, if this is going to be your entry into owning equities, then it makes sense to own the individual equities.
But does it make sense to own half or a third or a tenth or whatever the number may be? I do wonder about the mechanics.
I was just wondering, is it harder than sell a fraction of a share to find a seller?
It's interesting too, something SoFi brought up, that when they first launched stock trading, people were buying shares of GE and Ford, and they were like, why are millennials and young people interested in these old school car companies? They realized because it's a $10 stock. So they were like, that's why people love GE, not necessarily because...
They bought those the same reason they buy $2 Chuck.
Wine in a bag, exactly.
But that actually tastes great. Anyway, Kate, actually stay with us because this next one is right up your alley too. There are millions of people breathing a sigh of relief today after Chime, which is now the biggest digital bank in the country. We've had them on this program. They're recovering after the third outage since July. This blackout left their 5 million customers stranded and unable to use their debit cards or pay bills. And this is a cohort, like we had people tweeting about not being able to pay for gas at the gas station.
Right, this started happening on Wednesday, and we saw it on Twitter. People were complaining that Chime was out. There were a few different things. So the debit card wasn't working, the online banking, direct deposit, and that's really been their value add, is they don't charge fees, they don't charge overdraft fees. So as a result of that, they've attracted sort of a lower income demographic, and those are the folks that can't necessarily afford to skip 2 days.
You know, something just occurred to me. Amazon partnered with Kohl's for returns and things. They should partner with a brick and mortar bank, don't you think?
I think so.
As a backup, in case this all...
a lot of folks...
Yeah, that's what I'm saying. Chime should do the same thing.
I don't know. I mean, I think this is a word of warning because, and I just want to chime in here. If you think about what the danger is, the only thing we know about not having access to our money in a bank is from movies like It's a Wonderful Life, that's in black and white, or in Mary Poppins when there's a run on the bank over a tuppence, some confusion over a tuppence. Well, I think this is a warning sign to people who want to go and do something new, that if it's not properly regulated, managed, if you don't do your due diligence on what happens.
Even just battle tested, and that does, it's an interesting point about there not being a physical place or branch where you can go, worst case, and just say, okay, well, I can show up and talk to the teller about it.
Right, a lot of people are complaining that there's nobody to call, and that even that hotline, that they say millennials and younger people don't want to go and see somebody at a branch. You really don't know if that's true until a disaster happens.
Need to.
Right. And on Twitter, you had people, we spoke to a few people. Hugh's son reported this out with me. We spoke to people who were stuck at gas stations, who don't have a backup bank account, couldn't get to work, missed work for multiple days, or were at a restaurant and couldn't pay the bill.
Real quickly.
Free advice.
Yeah.
Partner with a brick and mortar bank as a backup.
And here's one final tweet I just wanted to show, was someone saying, I think everyone should be given $500 to compensate for this taking so long. I'm late on my rent. They charge $40
for you, $500 for you.
There's a petition now of 4,000 people that have said, we want our money. We want some sort of compensation. I missed multiple days of work here.
Yeah.
That's crazy.
Whew. All right, we'll see.
Don't blame them.
That's a mess.
Guys, thank you all. Appreciate it. appreciate it. Kate Rooney, Contessa Brewer, Bill Griffith, and Courtney Reagan. And coming up, one of my next guests says when it comes to the markets, we're stuck in a wash, rinse, and repeat cycle, and he doesn't see that changing anytime soon. We'll talk about what that means for your portfolio and take a look at shares of Slack, which is down nearly 10% today and has had a rough week. It was down 4% Wednesday, 5% on Monday. A lot of these newer tech software names we're watching closely have had a very rough go of it. We're back in 2.
Hi, my name is Sam Davis, and I'm going to tell you about exciting plans available to anyone with Medicare. Many plans provide broad coverage and still may save you money on monthly premiums and prescription drugs. With Original Medicare, you're covered for hospital stays and doctor office visits, but you have to meet a deductible for each, and then you're still responsible for 20% of the cost. Next, let's look at a Medicare supplement plan. As you can see, they cover the same things as Original Medicare, and they also cover your Medicare deductibles and coinsurance, but they often have higher monthly premiums and no prescription drug coverage. Now, let's take a look at Humana's Medicare Advantage plans. With a Humana Medicare plan, hospital stays, doctor office visits, and Medicare deductibles are covered. And of course, most Humana Medicare Advantage plans include prescription drug coverage. In fact, in 2018, Humana Medicare Advantage prescription drug plan members saved an estimated $7,400 on average on their prescription costs. Most Humana Medicare Advantage plans help you stay active and keep fit by including a Silver Sneakers fitness program at no extra cost. And you may be able to save on dental and vision expenses because coverage is now included with most Humana Medicare Advantage plans. You get all this coverage for as low as a $0 monthly plan premium in many areas. And your doctor and hospital may already be a part of Humana's large network. If you want the facts, call right now for the free decision guide from Humana. There is no obligation, so call the number on your screen right now to see if your doctor is in our network, to find out if you could save on your prescriptions, and to get our free decision guide. Licensed Humana sales agents are standing by, so call now.
Welcome back to the exchange. Fed Vice Chair Richard Clarida speaking a short while ago, saying the central bank is not on a preset course. He also said a big part of the yield curve inversion was saying something about the global economy, not just the U.S., and that's unwound, by the way, to 17 basis points lately. Are investors in for a surprise with the potential of no cut in October? Let's bring in Jeff Krempelman. He's Chief Investment Strategist at Mariner Wealth Advisors, and Kenny Polcari is Senior Market Strategist at Slatestone Wealth. Welcome, guys. Kenny, first of all, October cut, you think it's priced in?
I think it's priced in. I don't think there's any way now that the Fed is backing out on a cut. No, I don't think so. They can talk about all he wants, and I think maybe he's setting it up for the future because people are so intent on a December rate cut. But I think October is already based.
So you think they're going to go in October, but then maybe that's the end of the.
And I don't even think they should go in October, but I think they have to. Yeah, I think they have to. But yes, I think then he may be setting it up for slow down, everybody. Not so quick in December.
Jeff, what do you mean by this being a wash, rinse, repeat cycle for the markets?
Well, and then we've seen this pattern where, we have these freakouts and, just panic scares on the worry items in the headlines that are announced. And it creates negative psychology. The market sells off. And then when the data is released, it's been BTF, better than feared, and folks realize that things are moderating, not collapsing. You get these huge rallies, and that just repeats over and over again. We've seen that going all the way back to the recovery, but particularly beginning in December of 2018 when we had the 20% pullback, and then it's continued through this year. So we think it creates great buying opportunities when the fundamentals are moderating, not collapsing, and valuation's attractive.
Okay.
So we've seen it over and over again.
Kenny, one thing that we have looming tomorrow actually is this vote on Brexit. Right. And I bring it up just because we had the market starting to track it again this week when it looks like there might be a deal. We have now this additional complication of these tariffs that we're putting on the EU today. How important is tomorrow's vote going to be?
Well, listen, I think it's certainly important for Europe. I don't necessarily think it's going to affect U.S. stocks or U.S. mindset in terms of our investors going to continue to buy U.S. stocks. But I think, though, it is important for the broader picture, and everyone will be watching it for sure.
It's kind of, I guess the way to say has been one of the items on the list of worry, right? If it comes off, then I assume great, and the market rallies on that. But if it stays on.
But there is some question about whether the Parliament is actually going to be able to ratify it. Northern Ireland is already kind of pushing back on it. He's got to get 21 people, those guys that he kicked out a month ago, to get on his side and say, oh, by the way, we're back and we love you and we're supporting you. That might be a little bit of a problem for him, so we'll see.
So you're cautious. Are you cautious on the market overall at this point?
I'm cautious. I think as we move through earnings season, I fully expect that the market's kind of back off a little bit. More of this action like we're seeing today.
Even though the beats so far, they've been pretty good.
The beats have been so good, but we still have 2.5 more weeks of, energy numbers and consumer names next week.
Industrials,
industrial names. And so I wouldn't be surprised. I actually think the market should back off to the lows, the most recent lows, like 28.58 where it was. And then we rally into year end.
Okay, Jeff, how would you be positioned? I mean, are you basically saying the market overall is, people can be comfortable with exposure, or would there be sectors or individual names you'd recommend?
I think it's a great time to have some exposure to high conviction active managers. So be kind of laser focused in certain areas. And so our thought, as an active manager, we have portfolios where we are high conviction actively managed portfolios. We'd have a blend of offense and defense at this point in time. And so going into fourth quarter of 2018, we were a little more offensively postured, a little more in those cyclical economically sensitive areas. And as these policy issues have been stubborn and have lasted and taken longer, we've seen that psychology is a little more fragile. So we've kept cyclical exposure, but softened it just a bit. So for example, selling Morgan Stanley and Schwab that have some headline issues, very cyclically oriented. They face challenge from lowering rates and shifted into Intercontinental Exchange, a brokerage. They own the New York Stock Exchange, levered to commodities brokerage and also, just enhanced trading during rising volatility.
Got it.
So we're repositioning a bit.
Okay, so there's ways to do that, as you said, and I know you're hoping people, they go active. They don't just buy that ETF and sit there with the passive trend. Guys, thank you both. I really appreciate it today. Jeff Krempelman and Kenny Polcari, it's good to see you both. Also, don't forget, PIMCO co-founder Bill Gross will be on Power Lunch today. That'll be roughly around 2 o'clock Eastern Time. Coming up here, my next guest wrote the industry manual for tech companies on how to get you hooked on their products. Then he wrote a book on how you can break that habit. That's next. Check out shares of Boeing as we head to a break. They are near session lows, down more than 4.5%. This after the bombshell news. The FAA says Boeing withheld concerning messages from 2016 that were between employees and about the 737 MAX. A test pilot complained in one of them that the flight control system was difficult to control. Coming up on Power Lunch, we'll explore whether this could mean the end of the road for CEO Dennis Muhlenberg. We'll be right back.
There's golf. And there's the golf lifestyle. Shop with Golf has everything you need to go from the drinks to the links, to the boardwalk and the boardroom. This is the sweet spot for the moments you love and the looks you'll love even more. Because golf's more than a game, it's a lifestyle. Live the lifestyle at shopwithgolf.com.
ServiceNow put our workflows in the cloud. This changes everything.
You're right, sir. Everything.
Oh, not everything. I mean, you're still blatantly sucking up to me, Gary.
Brilliantly observed, sir. Always 3 steps ahead. 6 steps ahead. 16. So many steps.
You done?
Million steps ahead.
Let's look at this again.
ServiceNow. Works for you.
How well does your financial advisor know you? If they saw you on the street, would your advisor recognize you? At Ameriprise, we see you as more than a client. That's why our advisors care about what's important to you. They offer personalized advice to help you prepare for what's expected and even what's not, giving you the freedom to live financially confident. Because to us, you're more than just another face in the crowd. With the right financial advisor, life can be brilliant. Ameriprise Financial.
She wanted a roommate who could help with the cooking. But she wanted someone who loves cats. So we got Chris Walda.
Dinner's almost ready.
But one thing we could both agree on was getting Geico to help with our renter's insurance. Yeah, switching and saving was really easy.
Pick it all up. Good.
Could use a little salt.
Visit geico.com and see how easy saving on renter's insurance can be.
Driverless cars or trips to Mars, no commission. Delivery drones or the latest phones, no commission. No matter what you trade, at Fidelity, you'll pay no commission for online U.S. equity trades.
At today's Best Western, stay 2 nights and get a free night at over 4,200 hotels worldwide. 1 night, 2 nights, free night. Book now at bestwestern.com.
Technology and the future of work. November 4th in San Francisco. CNBC's At Work Summit. Top CEOs and tech leaders. Winning strategies. Reimagining the workplace. Go to cnbcevents.com for tickets.
Welcome back to the exchange. There's another Dow component that is down big today, and it's Johnson & Johnson at session lows now after the company recalled a lot of baby powder because the FDA found a trace of asbestos in a bottle. Again, a lot referring to that unit of measurement. The shares are down 5.5%, and that is another big cap stock weighing on the Dow, which is down 161 points. Now, with big tech under intensive scrutiny, part of the backlash targets how these companies dominate our attention. My next guest literally wrote the book on how to hook users with apps like Facebook, Instagram, and YouTube. And now he has a way for people to unplug. Let's bring in Nir Eyal. He's author of Hooked and the new book, Indistractable. Nir, welcome.
Thank you. Great to be here.
This is like the timeshare guy who says, I reformed and now I want to get you out of your timeshare. What made you have a change of heart on all this?
Well, it's not actually a change of heart. It's actually a different clientele, to be honest. So my clients that included, companies like the New York Times that got people hooked to reading the news, clients like Fitbod that get people hooked to exercise in the gym, Kahoot that gets kids hooked to education in the classroom. So that's who I wrote Hooked for. What I wanted to do was to expose the deeper psychology behind how companies like Facebook and Twitter and WhatsApp and Slack and Twitter, how they are designed to hook folks so that we can use these tactics across a broad range of industries. And that's exactly what's happened since I wrote Hooked.
Yeah, I love the candor. Like, hey, this is one client base and now I have another. So what do the rest of us need to know? And regulators are already kind of onto this. I've seen some Josh Hawley legislation that would ban endless scrolling, for example. What are the real tactics being used here?
Yeah, I think a lot of this legislation, to be honest, is really missing the point. I think when it comes to, do we really need a notification on our screen every 30 minutes, as Hawley proposes, that says, hey, you've been using Twitter for 30 minutes. Do you know that? I don't think that kind of stuff is actually very helpful. I think what we really do need to focus on is people who are actually being harmed by these technologies, and that falls into two groups. Children, who are already a protected class, and we have many laws in our society that protect children. And then the other protected class should be people who are pathologically addicted. And I think this is where we see people misappropriating this word of addiction, saying that all of us are somehow getting addicted, and that is just not true. All sorts of things are addictive to some people and not to others, right? Many of us have a glass of wine with dinner. We're not alcoholics. Not everyone who plays poker once in a while is a problem gambler. And yet technology has this unusual categorization by people.
Right. So someone like me, my screen time's 2.5 hours a day or something. Me and my husband debate whether or not I'm addicted. I mean, what would you say? We don't talk about this with folks where you look around and say, well, she's clearly a problem. I mean, what does real addiction look like and how can it be combated then?
So real addiction, the pathology of addiction, is something that is faced by a very small proportion of the population. Studies find that it's between 1% to 5% of the population. But for the rest of us, the vast majority of people, they are not addicted. We are distracted. But of course, that terminology places responsibility away from addiction, where you have a pusher, a dealer, someone who's doing it to you. When you call it what it really is for the vast majority of people, a distraction, well, now the responsibility is on us.
So you're trying to let Facebook off the hook?
No, I mean, not exactly. I do think, and I've met with Facebook, I've met with Twitter, I've met with Reddit, I've met with Snapchat, I've met with every single one of them, and I want them to adopt what I call a use and abuse policy, meaning that they should give us some kind of number for the people who are actually pathologically addicted, some kind of number of hours per week to help them. But for the rest of us, it's really our responsibility.
And maybe the rest of us can feel better that we're not addicts. Nir, thanks very much. Appreciate it. Nir Eyal, author of the new book, Unhooked. That does it for the exchange. I will go Joy and Tyler for Power Lunch. See you there.
Kelly, we're looking forward to that. Thanks very much, and we will see you over here in just a minute. Welcome, everybody. I'm Tyler Matheson, and here's what's new on a very busy Power Lunch Friday afternoon. Shares of Boeing near the lows of the session as the company alerted the Department of Transportation that employees may have misled the FAA. Could this be the end for the embattled CEO, Dennis Muhlenberg? Plus, the PIMCO co-founder and bond king Bill Gross returns after officially retiring from the business. He'll be here for an exclusive interview and tell us why he thinks a global slowdown is the new reality. And a booming biotech stock. Shares of this company have doubled in the past week. And the CEO will be here to explain why the party isn't over yet. The Power Lunch Party starts right now. Let's take a look at the markets right now. As we mentioned, Boeing is doing the most damage in the Dow, the S&P 500. Let's take a look also at the NASDAQ and the Russell. There you see the industrials off about 2/3% or thereabouts. The S&P down about 0.25%. Check out the bright spot in the Dow. That would be Coke, up more than 2%, saying strong sales of its Coke Zero Sugar line. And smaller cans, I like the smaller cans, are driving sales growth. Kelly?
I love them too, Tyler. Thanks. We start with the big story of the hour. Boeing shares are near session lows as it deals with more fallout from its 737 MAX safety issues. Let's go straight to Phil LeBeau for these developing details. Phil?
Kelly, this is all about a document that Boeing turned over late yesterday to congressional staffers who have been investigating the 737 MAX. This is a copy of that document. It basically is a text message or instant message conversation between the chief technical pilot at Boeing in 2016 and another Boeing employee. We're not going to read all of the messages there, but the one that's the most damning, in one of the messages, he says, "I basically lied to regulators unknowingly." This document, when it was sent over, also was alerted to the FAA, and the head of the FAA, Steve Dickson, sent a letter this morning to Dennis Muhlenberg, the CEO of Boeing, basically saying, why didn't we have this sooner? Apparently you discovered this several months ago. At least that's the indication. Boeing responded to this story as it developed over the last couple of hours, saying, over the past several months, Boeing has been voluntarily cooperating with the House Transportation and Infrastructure Committee's investigation into the 737 MAX. As part of that cooperation, today we brought to the committee's attention a document containing statements by a former Boeing employee. We will continue to cooperate with the committee as it continues its investigation, and we will continue to follow the direction of the FAA and other global regulators as we work to safely return the 737 MAX to service. Did you take a look at shares of Boeing? Remember that CEO Dennis Muhlenberg will be on Capitol Hill. He'll be appearing in two congressional hearings, one on Tuesday, October 29th, one on Wednesday, October 30th. You can bet he will be asked about this document, and not only what's in the document and this instant message conversation where the chief technical pilot says basically they misled the FAA or certification, the folks doing the certification guys, but also this question of when did Boeing discover this and why is it just now coming to light?
Phil, a quick question here. In the New York Times report, which is one of the early reports on this story, it says that Boeing had provided the transcript of this conversation to the Department of Justice, which is conducting a criminal investigation, and had done so earlier this year, according to people, quote, familiar with the conversation. So what do we know about that? It appears that Boeing has just given it over to congressional investigators in advance of Mr. Muhlenberg's testimony, but it clearly was known to the company, if this report is correct, some time ago because they gave it to the Justice Department.
And that's at the heart of what people are asking right now, Tyler. If you knew about this months ago, and let's say that they did turn this over to the Department of Justice and they've known about this, what Steve Dickson, the administrator for the FAA, is saying is, why are we just learning about it now? Shouldn't we have been alerted about this sooner? And that's why the FAA is saying we want questions answered not only about this document, but also about other documents. And oh, by the way, Tyler, the FAA has indicated it will be turning over more documents to congressional investigators a little bit later on today. We're waiting to see exactly what those documents are.
For my own clarification, what was at the heart of the, quote, inadvertent lie
that this technical pilot says he did? What was he lying about or misleading about?
Well, it has to do with the MCAS. Remember the flight control system? Right. The software in the MCAS. He had just been in the simulator with the MCAS. It's a conversation between the chief technical pilot, Mark Forkner, and another Boeing employee. And essentially, they're talking about his experience in the simulator with MCAS and how it reacted in certain situations. And that goes for a while, and then there is this quote of basically, I lied to regulators, quote, and then in quotation marks or parentheses, unknowingly.
Right, Phil, and before I let you go, just also to clarify, because this is relevant, and to me, maybe perhaps also the most shocking, the chief technical pilot says, quote, "Granted, I suck at flying, but even this was egregious." Am I missing something? How can their chief technical pilot say, "I suck at flying"?
Well, Kelly, I don't know. I can't get into the mindset of Mark Forkner. By the way,
but he is a pilot, right? I mean,
we have reached out to his attorney to see if he can give us some explanation about these instant messages or some explanation about where things stand with regard to him and the MCAS certification. Look, I don't know why he said that in terms of I suck at flying. You know, it could have been a side comment between him and another employee.
If I am inferring correctly here, it sounds like he was having an internal conversation where he was raising questions with a fellow Boeing either pilot or employee about the MCAS system, quote, running rampant in the simulator, and that I gather then he either did not share that information, withheld it, in other words, did not show it to the regulators, and that was the nature of the lie. In other words, that he didn't let them know of his concerns about it. That's
the inference you get from reading this conversation, these instant messages. But again, we don't know specifically. We have reached out to Mark Forkner's attorney. We are trying to get an explanation there. Well, look, we may not get any explanation. We do know that the DOJ has been looking into this, and there have been some reports that Mark Forkner has pled the fifth in terms of answering any questions on this. And so we'll wait to see if we hear anything from his attorney.
Okay, Phil, thank you so much. Phil LeBeau with the latest on all of those details for us. Just last week, Dennis Muhlenberg was stripped of his chairman title. Recall, they stripped the chairman title, left him as CEO, but it raised questions about how long he could last as CEO amid the uncertainty. Could this controversy now be the straw that breaks the camel's back? Let's bring in Jeff Sonnenfeld. He's Senior Associate Dean for Leadership Studies at the Yale School of Management. Jeff, can he remain as CEO?
Your viewers are going to be disappointed and you're going to be shocked. And the more I think about it and look into it, the more I am convinced that he can be. This is going to be a tough month, a probationary period for Dennis Muhlenberg. But as Mark Twain said in 1895, the reports of my demise are greatly exaggerated.
Jeff,
That's definitely the case here.
We understand.
There's a little bit less than meets the eye here. This is a big story, but go ahead.
Well, and I want to mean by that, but so important to what you're about to say is also what's about to happen. These messages were released, as we understand it from the New York Times story, as part of kind of the moves being made to prepare for him appearing for the first time on Capitol Hill. Now, are you saying he can survive both today's disclosure and that potential event?
There are those two sets of events. Today's disclosure, the two sets of congressional hearings would be pretty wilting. And what else? Just to put on the plate, in full disclosure, that the company, of course, is facing some turbulence on other fronts. The 777X is delayed on other 737 planes. There are cracks on wings that are still being investigated and repaired. There's a tanker that comes through, oddly, an Air Force tanker through commercial aviation has a big hand in that, and there are delays in parts. I mean, extensive delays on a bunch of fronts. So there's bad news out there. Can he survive these three sets of issues? Well, I think so. There's absolutely no evidence yet that the leadership has done anything wrong, that there's been any misconduct here. Just to take apart what Phil said in his report, and good for Phil for trying to get a hold of this guy, Mark Forkner's attorney. But he's banging his head against the wall. He's not going to get a response. If any listener wants to call, I think the guy's name, the attorney, is David Gerger. He's not going to respond. He's in Houston because that's this guy left Boeing and the test pilot and took a job at Southwest Airlines, and he hasn't been responding since late January when Boeing got this message, and immediately by the first week of February turned it over to the Justice Department, which is what they're supposed to do. And as most of the listeners know, when something is a criminal investigation and the Justice Department doesn't want you spreading around, because who's under investigation here? The FAA and the Department of Justice are being investigated. They couldn't give it to them for the same reason that anybody under investigation.
Jeff, what do you mean when you say you think there's less here than meets the eye?
Is that in terms of the leadership, in terms of there being something that creates great clouds, certainly there's a lot of turbulence, a lot of clouding here. There's a problem with clearly something in the FAA and the Department of Justice, which many ways operate as one entity here, in that they're
Department of Justice and the FAA operate as one entity. I don't understand that.
Department of Transportation. Thanks a lot, Bill. The Department of Transportation is being investigated along with the FAA for possible misconduct. They're subject to investigation along with this test pilot and along with the guy he wrote to. I think his name Patrick Gustafson, who I believe might still be a Boeing attorney. I think the message you have, that is message you have there, is written to another
But let me interrupt you here, Jeff. I'm perplexed, frankly, to the point of wondering whether you've ever done work for Boeing. But number two, I'm perplexed.
No, I've never gotten a nickel from them. They haven't offered, but I've never gotten a nickel from them. I'm not looking for it. And I'm not personal friends.
Let me finish my thought here. Let me finish my thought. If the management knew of these messages some months ago to the point that they turned them over to the Department of Justice, presumably the head guy, Mr. Muhlenberg, knew that those messages had been turned over to the Department of Justice, was aware of those messages, and if he did not until yesterday hand them over to congressional investigators, isn't he then responsible for that omission? Isn't he then at least implicitly culpable for withholding information from his chief regulator?
No.
Why?
And the reason is, in a criminal investigation, you have to ask the Department of Justice why they didn't want this information turned over.
Do we know that?
It was only in advance.
But we don't know that. We don't know whether the Department of Justice said...
Well, they chose not to. If they chose not to, if the Department of Justice didn't give it to the FAA or the Department of Transportation, wouldn't that confirm for you that they're under investigation? These are not enemy countries fighting each other. These are part of the same administration, the same executive branch, and right hand chose not to tell left hand because right hand is investigating left hand, and the company had to go along with that. And if it weren't for these congressional hearings coming up in 2 weeks, then they wouldn't have even had to tell the FAA now.
But we don't know, do we, Jeff, that the Department of Justice directed Boeing not to hand these documents over to anybody.
So then why don't we have the Department of Justice on the show? Somebody being asked that question, because clearly
we'll get on it. We'll find out. We'll
that's
find out
the big
whether
question.
They had been directed. Because if they had not been directed to withhold the information, you have to ask the question, why then was the information withheld, right?
I believe they were directed to not put this information to the people who are under investigation. It would be like when other parts of the U.S. government that we have in other headlines today aren't being told when they're under investigation. Is if the Justice Department, the prosecutors are investigating, then you don't go over and interfere in that investigation. If the Department of Justice wanted the Department of Transportation and the FAA to know, they would have known the first week of February. They weren't told because they've been running an investigation. Meanwhile, you might want to ask, what does this guy Faulkner know? We don't know. He's not telling anybody. And he may plead fifth all the way through because he's not telling anybody what his problem was. So then another question, is this MCAS system unsafe? What does he know? We don't know. He won't tell Boeing, and he hasn't been telling apparently the prosecutors.
Yeah, we'll to your point. I mean, I don't know whether the Justice Department will comment on this, on whether they asked them to withhold information or not. But certainly Boeing should be able to answer that question as to whether they were directed not to share that information with their chief regulators.
And if there's and just think of the timing here. Is Boeing turned this over after the first crash, the Indonesian Lion Air crash, and before the Ethiopian crash? So that was in March. So this was in February that this information was given to the government. Do you think that the government would knowingly hold back information with the public safety at risk if there wasn't a criminal investigation, that they were not telling the FAA and the Department of Justice about something which they thought was a clear and present danger? we have 346 deaths on our hands here. This is a horrible situation, and half of them happened after this was turned over. So that's a question you got to ask. So there isn't any evidence that the leadership did anything wrong. What's going on with this test pilot? Why he went to Southwest Airlines? Why does he not answer any questions? Why does his attorney not answer Phil LeBeau?
Okay.
I mean,
Jeff, thank you. We got to leave it there. And we should mention Boeing shares are now down more than 5%. They are at session lows. As we continue to raise and ask all of these questions, Jeff Sonnenfeld joining us from Yale there. Again, a 5% drop for Boeing shares. That's the biggest chunk out of the Dow, which is down at 183 right now. We'll continue to keep you updated as we follow the story. Also still ahead, Bond King Bill Gross resurfacing from retirement with a new newsletter. Say goodbye to double-digit market gains, he says, and he'll join us next in a Power Lunch exclusive. Plus, Credit Suisse is calling for the death of the department store, and retail stocks are getting crushed today. But one top analyst says Stitch Fix could rise from the rubble. She'll join us coming up. Power Lunch will be right back.
Opportunities aren't always obvious. Sometimes they just drop in. CME Group can help you navigate risks and capture opportunities. We enable you to reach global markets and drive forward with broader possibilities. CME Group, how the world advances.
You should be mad they gave this guy a promotion. You should be mad at forced camaraderie. And you should be mad at tech that makes things worse. But you're not mad, because you have E-Trade, whose tech makes life easier by automatically adding technical patterns on charts and helping you understand what they mean. Don't get mad. Get E-Trade's simplified technical analysis.
It's 11 a.m. on Wall Street, and Squawk Alley is live.
Carl Quintanilla, Morgan Brennan, John Port. Squawk Alley, 11 a.m. Eastern on CNBC.
We did shut down Treadstone, right?
We've worked so hard for this. What's Treadstone?
Unsanctioned Black Ops program run amok. Somebody's bringing it back. We need to stop it.
Treadstone.
Whether mending fences in the Highlands or on a building site in Cornwall, there are thousands of hard-working Ford commercial vehicles in the UK. It's why we're truly the backbone of business. And now we'll give you £1,000 off the recommended retail price if you test drive and purchase a vehicle during our Backbone of Business dealer event from the 11th to the 21st of October. That'll really get your business moving. Ford Commercial Vehicles. The backbone of business. Search Backbone of Business to learn more.
At participating dealers, exclusions apply.
There's It's a Friday Evening happy. Listening to a banger happy. There's no traffic on the M1 happy. The in-laws aren't coming round tomorrow happy. There's only 68 days until Christmas happy. Work's done for the day happy. The nights are darker and I got my headlight bulb sorted in no time at all happy. You get that kind of happy from QuickFit in Watford. Book online now at quickfit.com and drive away happy. Terms and conditions apply.
Welcome back to Power Lunch. One-time bond king Bill Gross out with a new investment letter. His first since his official retirement. Wait, does that mean he's still retired? He's warning investors to brace for slow economic growth and sluggish markets. And our Brian Sullivan is in Newport Beach with the PIMCO co-founder for a Power Lunch exclusive. Brian?
Kelly, thank you very much. I mean, literally, we're welcomed into Bill Gross's house. So, Bill, thanks for having it. Great to see. Where you been, by the way?
Well, I've been at the beach.
Okay, there you go.
Or the golf course.
So let's jump right. I want to get your investment advice because, by the way, Bond Guy, who now likes some stocks and will name some names, want to ask you just on a personal level, would you have taken a mulligan? Anything you've done the last year or two?
Well, maybe the last 5, but the last year or two,
or the last 5.
I think I got out a little bit too late. So, if I had to do it again, I wouldn't have left PIMCO, but in leaving PIMCO, I would have gone straight to the golf course. I think I tried to prove too much, and I did it in a vehicle in the unconstrained fund that was a little bit offbeat from total return investing. So I'd certainly want to take that back.
Blackjack, you hit on 16.
Depends on what you're hitting into.
Okay, fair enough. But you know, everyone sort of was knocking you about the German Bund trade as well. By the way, after 40 years of building up $2 trillion in assets, people want to kill you over the trade. But I think the trade make money now, right?
Yeah, it has. I mean, I lost money as the spread between Bunds, the 10-year, and U.S. Treasury's 10-year widened. It's now narrowed by a good 30 or 40 basis points. So if I was still around, I'd be making money and they'd be singing my
People say, okay, why are you talking to Bill Gross? He's retired. First off, you have a lot of money. You're still active. And what I think is cool is that I don't want to say you're a stock guy, but now that you are unconstrained, truly, it's your money. You can do with it what you want. You're buying individual equities like Annaly Mortgage.
Yes. I still have some Treasury futures. I don't have the Treasury Bund trade, which I had. But yeah, Annaly is a mortgage REIT. It's 5 or 6 times levered, and it depends upon the 2 to 10-year yield spread, so to speak. The spread is flat and tremendously. It's almost inverted, and that doesn't do well for not only for the Annalys of the world, but for the banks of the world. Now it's back out to 15, 17, 18 basis points, and perhaps moving higher as the Fed initiates QE in another form.
Don't call it QE. They told us.
I know.
Is it QE?
In another form, in a baby QE, because they're buying bills as opposed to 5s and 10s, and when they buy bills, theoretically that should widen the yield curve a little bit and provide some margin for banks and for mortgage REITs and the like that depend on that. Yet, you know, Brian, capitalism itself depends on carry, and that's why yield curve flattening is so dangerous, because no one is willing to take risk by extending maturity and extending duration in order to capture yield. There's no yield to capture. And when you take that out into stocks and into real estate and so on, it's simply a reflection of capitalism at risk with a flat yield curve, because no one wants to take.
Everybody hated when the Fed initiated QE, just they didn't want the Fed in the market. But if they held their nose and bought equities, they did well. Is that part of your thesis with Annaly? Do you like a lot of other mortgage REITs as well? And will this baby QE push up all stocks?
Well, no. Baby QE won't push up all stocks. It'll help to salvage a day or two of repo madness in which interest rates can and did go to near double digits. So it won't salvage that. But I'm in there for the yield. The yield is 12%. There are other mortgage REITs that are similar. I like high dividend paying stocks.
Such as?
Such as Invesco, which is a investment management company. It trades at a 6 PE. It has a 7.5% yield. And yes, the active management business is under attack and has been for a number of years, but Invesco has a lot of closed-end funds in which the fee is fixed permanently. And so I like it from that standpoint, and I like it from the standpoint of the cheapness and the dividend and those types of things.
And are you one of these guys that's been buying into this utility rally? Because utilities have been just absolutely on fire. I don't want to say out of control because it makes it sound like there's a judgment there, but 24 times earnings?
I think it's a little hot. Not now. I sold the last of my Dominion Energy about a week ago.
Oh, you sold out of Dominion?
Yes, but had a great run. It was cheap and undervalued because of electricity lines crossing the Appalachians and regulations and so on. But that's behind them for the most part. I think PPL, which is half UK and half US at the moment, it's a good.
Hold on. Can you hear that? Here comes Ben Bernanke with the helicopter of money. I think it's just dropping down. So what's the last most fun investment that you've made then?
Well, there have been 2 arbitrage situations in the healthcare business. Allergan, which manufactures lenses and so on, is being bought by a health company called AbbVie. And there's still a good 7 or 8% in terms of a margin close-up if and when they close the merger 3 or 4 months from now. So I like that, and that's moving fast, and I'm making some good money in Allergan. That's
and I remember a few years ago, Allergan, I like that. I remember a few years ago you had a similar trade on LinkedIn with Microsoft, which went out very well. Not bad for a bond guy. Macroeconomy. U.S. recession the next 12 months?
No, but getting down there. I mean, we're down to 1.5% in my view. And the thing is, Brian, that fiscal stimulus that we've had with the $1 trillion deficit and the tax cuts and so on, to my way of thinking, they're basically played out. And you need another trillion, not just the same trillion, but another trillion to do the same type of magic. And so, you know, that...
Will we do the trillion?
Well, not in the next year and a half. Not with the Democratic Congress. Depends on who's going to be elected. If Warren gets in, for instance, yeah, we'll do another trillion for sure. But for the next year and a half, you just got to sit and watch and wait. And so the fiscal stimulus, which most of the world needs, Germany needs it, but they're so tight and they're so stingy that they can't spend money on their economy. They can only lower interest rates. And so my point is that the interest rate play is basically gone for most of the world because $17 trillion worth of bonds are in negative yielding. What lies ahead and what should lie ahead is fiscal stimulation, and that doesn't speak to good
running out of time.
Things about fiscal deficits.
Very quick. Do we get another rate cut in October?
We do.
Do we need it?
We do.
If Trump gets impeached, do you think that bond yields go below 1% as everybody flocks to bond? How does that impact the market generally? I know it's a big if, but if.
It hasn't so far. I think it should. And what would it do? It would slow the economy even more and might produce lower treasury yields, but not 1.5% or 1%.
Do you think Trump will be reelected?
I don't. I hope not.
Bill Gross, great discussion.
Thank you.
I don't think we've talked stocks in a long time. It's great to. Okay, I'm going to ask you this, because I said I wouldn't get too political. You said if Warren, who do you think, if Trump doesn't win, is it Warren?
I think she will be the candidate. Yes.
You think so?
I do.
And that we'd get another trillion maybe in stimulus.
I think Biden is too old and old-fashioned, and Bernie Sanders is too old and old-fashioned. I think Warren is the face of the future for the Democratic Party, like it or not.
And she has a very good chance of becoming president.
I think so, based upon what's happening now. Yeah.
And maybe we get that trillion and more stimulus or
I think for
fiscal
sure,
stimulus.
for better or worse. And some would say inflation ahead, and perhaps that's true. But remember, the Fed's been trying to get to 2% inflation for 10 years now, and it hasn't really made much.
Maybe
progress.
another trillion will do it. Listen, Bill, don't be a stranger. Anytime you need us to house sit, it's not exactly a mine, Kelly, but I'm happy to be here anyway. Don't be a stranger. And by the way, we got a second part of this interview. We'll continue it on CNBC.com, not live, but it'll be posted later on tonight. So more with Bill on his worst trades, his best trades. That'll be on CNBC.com later. Thank you very much, Bill.
Thank you, Brian.
I love casual gross.
Oh, wow.
Nice. What do you think, guys?
I like the
Power
house
lunch
sitting
live
idea.
at
I
Casa
think
de
the house
Gross?
sitting is a good idea. That's a lovely spot. Thanks to both of you. It says in the prompter, bring in Ron and Sana. Hi, Ron.
Hi, I've been at that house, actually.
Have you been at that
I think
house?
2004, we went out to
Lovely
Bill's house
spot.
to do an interview. Yeah.
Lovely spot.
He was finishing his yoga class.
All right. I want to turn away from politics, but they ended on politics.
Sure.
He just said he thought Mr. Trump would not win re-election, that Elizabeth Warren would be the candidate, because evidently in his view, she's all that much younger than Bernie Sanders and
At
Joe
age
Biden,
70,
which she really
or so.
is not,
Yeah.
but vitality, vigor is a whole other thing.
Right.
2 days ago on this network, Leon Cooperman said if there's a Warren presidency, the stock market would go down 25%, the same if it's Sanders.
Well, yeah, I mean, I suspect that might even be true. The question is, does a 25% pullback in the stock market matter in the longer run? I think policy matters. I'm not saying I'm supporting Elizabeth Warren's policies. I'm saying I'm not sure that, we've been through numerous 25% declines in the stock market. And if you're a long-term investor, someone like Leon would tell you just buy more, right? I mean, of what he went through 2008, I was invested with him at the time and got hammered and then was up 80% the following year. So, I'm not going to make too much about a 25% pullback based on someone's political assessment. They said the same thing about Bill Clinton and Barack Obama as well.
They said the same thing about Donald Trump.
Yeah, absolutely. So we had an
25%.
Well, we had an 8% decline overnight and then rallied for a year and a half. Yeah, exactly.
We had full
Brexit.
The market's up 50% from election day.
And it was up, 280% under Obama.
My question, if you'll indulge me, Kelly, for one more, is this. The market has largely been in can we call it a trading range?
Since January of 18.
About 18 months, okay? So there you go. You've got China's economy slowing.
A lot,
domestically, from trade and from other things.
Yes.
You've got slow global growth, and the IMF, whether they're good at forecasters or not, I don't know, saying it's going to slow next year.
They have a
You've
track
got
record.
corporate profits that are basically negative right now.
Well, the bar's really low, right? So if you're projecting -4 and you come in flat, everything looks good.
The bar is low. You've got trade uncertainty, and you've got the possibility of impeachment.
And you get Brexit vote tomorrow.
And we are less than 1% away from an all-time high in the S&P and the Dow, or thereabouts. Why aren't stocks lower, not higher?
You got me. And look, there's an enormous divergence between what the bond market's saying about global growth and what the U.S. equity market. In fact, what equity markets around the world are saying. They're up on average about 18% here and abroad in many cases. The bond markets, as Bill pointed out, $17 trillion in negative yielding debt. That would suggest something wildly different. And you've got the Fed active in the repo market, as he said, trying to push short-term rates down in order to steepen the yield curve so that you get a positive carry and business investment becomes more profitable. So all of those things are working simultaneously. I was just at a kind of Chatham House off-the-record event this morning where we were all talking about this. No. I mean, look, I could say what I said because it's nothing different than I say here, which is I think growth recession in the U.S. is most likely where you're at 2%, under 2%, feels too slow. The Fed does ease in October, maybe takes some time off, reassesses. We watch the labor market closely. Inflation, for all intents and purposes, is not really an existent problem in the U.S. Deflation is a problem elsewhere on the globe, around the globe, or disinflation. So central banks continue to ease, as Bill said, in the absence of large-scale fiscal stimulus, although we may see some of that in other parts of the world before we see it here.
Ron, thank you very much. Appreciate it.
Shall we get to Trading Nation? Mike Santoli joins us now to kick things around.